How do you start investing? It's a funny question, and it's a funny question because a lot of people are too embarrassed to ask. I even have family members saying, "Look, I know we're related, and you've written all these books about investing. You do it; that's your livelihood. How do you invest?" So let me break it down into the very simplest terms. The first thing, obviously, is you would need an account with a broker you would instruct to buy the shares. So how do we find a broker account? Now, if like my cousin, you were in the United States, you might pick an E-Trade or a Charles Schwab or a TD Waterhouse, one of the bigger names you might have heard of. If you're in the United Kingdom, there's many. There's Barclays Stockbrokers, Halifax. You want a broker if you're in the UK, which is FCA regulated. And like I said, there's lots of very well-known household names of stockbrokers. Then once you've opened that account, you've got to fund it, just like you'd fund a bank account. And that usually means that you'll be given, obviously, a username and password to your brokerage account, and they'll give you instructions how to fund it. You might fund it through a credit card. You might fund it through a bank wire. Now, remember, all investing is risky, so you only want to use risk capital. Were it to be the case that you also wanted a SIPP or ISA, most brokerage accounts in the UK, if you happen to be UK, will have an option to open a SIPP or ISA account. How do those work? Well, an ISA is just a tax-free wrapper, £20,000 each year at the moment, where if you fund that account, so it's still an account within your broker, but not a general trading account, it's an ISA account, then with that £20,000, you might buy, let's say, £1,000 worth of Microsoft shares or £1,000 worth of BP shares. We'll come to that in a second. But it means any gains in there, even if you held whatever you did, bought and sold it within that ISA wrapper for the next, 30 years, and you kept increasing that money because it grew with the market, there'd be no capital gains tax on it unless the laws change in the future. So that's an ISA. A SIPP is similar, except it's locked up until pension and retirement age. Okay, so be careful. More research needed on that by you before you look into the SIPP side of things. And there's limits with the ISA on what you can put in each year as well. But this is just an overview to give you a flavor. So, okay, you've opened the account, you've wired the money across, because when you open the account, the brokerage tells you how to wire the money across, like paying for anything on online shopping. They'll tell you how. The next thing is, well, how do you buy a share? And then we'll also come to how do you know what to buy a share in? Okay, so let's say you have come to the conclusion you want to buy Microsoft or Apple or Amazon or Square or PayPal. We'll put that to one side for a second. How do you buy it? Well, the easiest way is usually to work out how much money you want to put into a share, and we'll come to that in a second as well, and say, well, I'd like to buy, let's say, £1,000 worth. So that way you don't need to calculate how many individual shares you need to buy. The broker will do the calculation online. It's an online purchase, just like you do any other online shopping, okay? And it sits in your account. Yes, people ask, where is it? Where's the share? Do I get a certificate? No, it just sits in your account, just like the money in your bank account sits digitally in your account, and the bank says this is how much you have when you log in. It's the same with shares. Okay, so the other issue then becomes, well, how many should I own? And depending on how many I own, how much money should I put into each? Now, I have a simple rule. I divide my investments into 15 equal lots, which I hold for 12 months. Okay, and then I review and repeat the process. If any of them drops 25% from the highest they've been since I bought them, I exit. That means monitoring them, obviously. Not every day, but maybe every fortnight, every month. Okay, so the numbers to remember there, 12 months, 15. That's just for me. Doesn't mean your risk profile is the same. Now, you might say, well, that's all too complicated. I still don't know what to buy. How do I know what to buy? Well, the main measures of working out whether a stock is worth buying are valuation. In other words, the profit, this is where it gets a bit complicated, the share price relative to the profitability of the company. Well, you're not really going to understand that just by me describing it. Growth, revenue growth, sales, are they growing each year? It's easier to understand. Dividend yields, that means for every £100 or $100 of stock, how much are you getting in dividends, the income a company pays to its shareholders. And a dividend yield might be, say, 5%. If it's 5%, that means you get £5 for every £100 worth of stock, if they keep those dividends. So it's always an estimate. But that's one factor which impacts its future share price. as well as sales growth and whether the stock price is cheap relative to the profits of the company and the rate at which those profits are growing. Other factors which are relevant are cash flow, how much cash is coming in even before profits, or once you take out expenses. Now you might say, well, this is all too complicated, Alpesh. Maybe I'll just read a journalist comment, or maybe I'll give it to a fund manager. Now there's problems with that. Journalists might only focus on one or two narrow things, and they might make something sound really great and interesting. It's their job as journalists. They're not fund managers. Equally, you might say, just give it to a fund manager then. The problem with that is the research shows most fund managers underperform the markets. Yeah. So if you're more sophisticated, you might already have given it to fund managers and realized they've been underperforming the markets, and you can actually see what they own. And you might think to yourself, I don't want to own those. I actually want to own the other ones. Okay, so there's other ways. There's many online tools to help you learn. I created campaignforamillion.com to give you some of those free tools and free education so that you can learn yourself how to invest. Because I think people should know for their own pensions or savings. Now, the question might become, well, what if I've got very little money, like just £1,000 or $1,000? Well, of course, you may well argue, well, it's pointless buying a couple of Microsoft shares if I've only got $1,000. I mean, you might do it because of the experience, knowing that later on you'll be well prepared for when you've got more money. And that's one way to look at it. Alternatively, you're right. So little, what's the point? Well, at least educate yourself. Use the money for something else. At least educate yourself, and because sooner or later it will come in handy. Again, the data shows the people who invest tend to be the wealthiest in society. It could be cause or effect, but we know that having the clever people at Amazon work for me to look after my pension, because that's what they do when I'm buying shares in them, that's good. So like I said, very simple. You open an account. Okay, that's easy. It's like opening any other account of anything on the internet. You wire some money, just like paying for anything else on the internet. You buy some stock, just like buying anything else on the internet. Simple as that, okay? And in order to know what to buy, like I said, see some of the tools and the education that I provide on campaignforamillion.com. They're all free. They're based on the books you see over my shoulder and my experiences as a fund manager as well, to explain to people why they should know this stuff themselves so they can make better informed decisions and make their money work harder for themselves. Hopefully that gave you some clarity on how easy it is for you to start doing this. And then, of course, you'll have other questions. Once you've got them, put them in the comments and we'll answer them for you. But at least this is a starting point. Everything you ever wanted to know about investing in, under 10 minutes.